Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high quality free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about USDJPY. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market, then we will move to the order flow, and by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, if you don't know what the commitment of traders is essentially what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. Now, starting our analysis here on the monthly time frame, what we can see is that we have a market which at the moment is testing a quite important structural level. In fact, if we zoom in, we can see how this zone was acting as previous monthly resistance here, preceding the creation of this red candle. The market then broke above the zone, and at that point this previous resistance was turned support here. The market tested the area and started rejecting it to the upside, and at the moment we have this previous support which is now again acting as support here, and we could expect a potential rejection away from this area. Dropping down on the weekly, what do we have? Now, from a weekly perspective, we can notice how at this level we have quite strong previous weekly resistance turned support here, again support here, which is still acting as support. So we can see how the level that we have identified on the monthly is being respected perfectly also here on the weekly time frame, with only one break of the level, which is essentially this one here, where we had the break below, then break back above, confirming this as a fake breakout. However, as we're currently testing again the zone, we have already started rejecting it to the upside, meaning that more bullish price action could be created away from the area. Now, if we look closely, we can also notice how we do have an impulse followed by this correction. Now, in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse. And if we do that, we can see how we have a perfect 0.618 golden ratio Fibonacci retracement, lining up perfectly with this previous support, which is still acting as support, from which there is the possibility of seeing a potential rejection to the upside away from the area. Dropping down on the daily time frame, what do we see? Now, from a daily perspective, what is important to notice is that if from here we actually get a rejection to the upside, at that point, what we would have is the creation of a W formation. And after the creation of a W, what you could expect is first a potential completion at the neckline, and then more bullish continuation rejecting the previous resistance turn support. So in this case, by looking at the market on the daily time frame, we could expect short-term bearish price action and then longer-term bullish continuation. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data specifically for the JPY, what we can see here is that with the last reports on the JPY, net positions have been decreasing. We went from having the high of minus 20k net positions all the way down to minus 74k net positions. In fact, if we look at what has been happening, we can see how institutions increased their shorts on the JPY from the low of 42k all the way up to 85k. So essentially, shorts got doubled from an institutional perspective on the JPY. And if we look at the longs got decreased from the 22k that we had here all the way down to 11k, so almost cut in half. This means that there is very strong selling pressure on the JPY from the institutional side of the market, which makes USDJPY stronger, because a weakening JPY makes USDJPY stronger. Now, what this means is that if we will actually have the creation of this W formation, there is a very good probability of seeing first the potential correction and completion of the W formation at the neckline, and then from here there is a good probability of seeing more bullish continuation. So how we could be approaching these two potential moves? Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the upside, waiting for the market to shift from an intraday bullish market as we would have to an intraday bearish market. And if the market would shift from an intraday bullish to bearish market and provide to us one of our valid entries, at that point we could be looking for a potential move to the downside for the completion of the W at the neckline. And if the market would go and complete the W at the neckline, at that point, once again, we could be monitoring price action from an intraday perspective, and if the market would provide to us one of our valid entries, we could be looking for a potential move higher, with the weakening JPY making USDJPY stronger. Now, if you don't know what I'm speaking about when I say valid entries, this kind of things, you want to learn more, I really suggest that you go and check out the mentorship program, which you can find at transparentfxtrading.com. In fact, now completely for free, you have the possibility to gain access to all my courses with all the rules of the strategies. You also have the possibility to integrate with one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is the one that we used precisely in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you continue to scroll down, you will see that directly from here, by following these 3 easy steps, you have the possibility to get free access to the mentorship program. So I really suggest that at least you go and check it out at transparentfxtrading.com, and I will see you in it. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you, and I will see you in my next breakdown.